That leads to the second part of our discussion, which is macroeconomic investment trends. Doug, I'd like to follow up on what you said previously and talk about solutions to the problem. So we've already discussed some of the major problems facing the country and abroad. I want to hear what solutions you think could be implemented on a private and public level to fix these problems. What are some of the positive changes that you're looking forward to as an investor that could drastically change the investment landscape?
Well, Rick can tell you I'm the first one to look at the bright side whenever that's possible. And the bright, the bright side is that gold stocks are very cheap now in both relative and actually in absolute terms. And all these trillions of dollars that the federal government is creating has created bubbles. We've seen a housing bubble, we've seen a tech bubble, we've seen a pot bubble, we've seen a blockchain bubble. I think the next bubble that's going to be discovered by the Robin Hood kids is going to be these junior mining stocks. Most of them are crap. The mining business itself is a crappy industry for all kinds of reasons. But the good news is that it's the most volatile class of stocks on the planet. And they'll discover that since 1971, when gold was freed up, there have been 5 major bull markets, especially in these junior stocks, when the market as a whole has gone 10 to 1. So when the Robin Hood guys discover that, they're all going to pile into these things, and people like Rick and I are going to make a bundle. The ducks will be quacking, we can feed them. So that's some good news. It's not gonna change the big problems that we have. You want to know what my solution is for the big problems? You've got to abolish the Federal Reserve. You've got to go back to gold as money. You've got to disband about 90% of the U.S. government. You got to withdraw all American troops from abroad. Probably default on the national debt so that the next generation of Americans aren't turned into indentured servants and the people that have been financing it are punished. There's all kinds of things. None of that's going to happen, though. It's fun to talk about it. I enjoy it. But the big picture is not going to change until the whole rotten structure that we have today collapses, and then it's rebuilt. The only problem is when it's rebuilt, it's probably going to be worse than it is now. Just like during the French Revolution, wonderful that they got rid of Louis XVI, except then they got Robespierre and then Napoleon and the Russian Revolution. They got rid of Nicholas II, but then they got Lenin and then Stalin. So that's what happens when a major country collapses into a smoking mess. Things don't get better, they get worse. But hey, we're like cockroaches. We'll survive. Don't worry about it.
Rick, I'll let you respond to the first part of Doug's answer here about mining stocks. I know you have a lot to say about mining.
Yeah, and I agree with Doug's analysis of mining stocks. The truth is that a precious metals bull market is something, as Doug suggests, that's special to behold. You know that I've drawn Kitco viewers' attention for years to the Barron's Gold Mining Index stock charts, and they really show the cyclicality and volatility of markets. But in particular, as Doug suggests, they show the extraordinary upside that occurs in good markets. And I think that we're in the early innings of a bull market in precious metals and precious metals equities that will continue to reward investors extremely well. People ask me, and by the way, I've talked to 15,000 individual investors this calendar year. That's a lot of people. And people say, well, Rick, the gold price has recovered from, 1,000 to 1,900. What can you hope for? Well, the decade of the 70s, it went from $35 to $850, admittedly price controlled. Maybe a better example would be 2000 to 2011, where it went from 250 to 1,900. The gold equities, of course, do better, never mind in gold bull markets, but in recoveries from oversold bottoms. We've had 9 of those during my career. The index itself has recovered in the most tepid recovery, 160%. That's not the best stock, that's all the stocks. And in the best, 1,200%. So my suspicion is that the next 2 to 3, maybe even 5 years will be very generous to precious metals and to precious metals equities. The surprise, I think, for everybody 3, 4, 5 years out will be that after a period of real underperformance because of economic weakness, that we will have a supply-led bull market in industrial materials, reminiscent of the one that we enjoyed in the 2000 to 2006 period. This won't be as a consequence of a great economic recovery, but rather as a consequence of systematic underinvestment in the means of production in terms of natural resources. So I'm expecting, actually, from my own point of view, 2 bull markets, one of which I'm enjoying right now, and one of which I'll enjoy 3 years from now, 5 years from now, at some period of time where we balance supply and demand by obliterating supply. Really an interesting way to go out in terms of my career. Other potential bull markets that people aren't looking at, my suspicion is that the stage is being set in frontier and emerging markets, in particular African markets, for a real bull market. It's true that African governments are particularly pernicious, but they're also particularly inefficient. And there is a large unmeasured economy in Africa. There is a young population that is getting a real education and being exposed to real ideas faster than other places in the world. The explosive growth that I see in organizations like Students for Liberty tell me that the African millennial is getting ready to surprise us all. The consequence of that is that I personally invested in a small private investment bank active in sub-Saharan Africa, because I think that we're going to have a bull market, admittedly from the ashes, that will really, really, really surprise people in emerging and frontier markets.
Okay, that leads me to my final question to the both of you. Now, Doug, you mentioned Robinhood traders, and I'm a millennial myself. What advice do you have for people in their late 20s to early 30s who may not be professional investors or traders, but who want to get into the markets, who want to understand a little bit more? What mistakes are they making right now, and what would you advise them to do instead?
Well, to start with, they're following the trend, and the trend has been up for a long time. And like this guy that, I forget his name is Portnoy, the Barstool guy. Who am I talking about? It's like he says, the first rule about the stock market is it goes up. And the second rule is it always goes up. He said something like that. Well, look, that's actually bad advice. It actually goes up and down. And I think the next stage, depending on how many more trillions of dollars the U.S. government creates, is likely to be down. We could have a credit collapse. Look, what should a millennial do right now? Well, don't take any advice that you hear in 5 minutes on a podcast. I mean, you've got to read a lot of books. You've got to actually study this. You can't just follow a trend and buy some company that you don't know what it's doing. I don't know. Look, I've actually learned a few things. I'm not expressing it very well, but I've learned a few things over the last 50 years that I've been playing in the market. And it's pretty hard in just a couple of minutes or a couple of seconds that we have left here. Here's my advice, okay? People are looking for a tout. They're looking for something that's going to make them money. They don't care why or any of the details. Don't clutter my mind up with earnings and management and all this type of thing. What am I going to buy that's going to go up? Well, I'll tell you. Buy into these crappy little junior gold stocks now. They're going to be the epicenter of the next bubble. And the whole group's likely to go 10 for 1, like I've said before. That would be my advice. And if they're looking for, and following up on what Rick said about Africa, I've got a lot of views on that too. I'm not quite as optimistic as Rick is, but I'll say this. If I was a 30-year-old, if I was a millennial and I wanted to make money, I would go to Africa. I'd want to go someplace where it's an unlevel playing field. I don't want to be on a level playing field with 100 million other people just like me. Go to Africa where the odds are on your side, where you're the only kid on the block that's got an education and money and connections. So, second your motion on Africa, Rick.
So, Rick, I'll let you finish the conversation here. So Besides going to Africa, what would you do if you were 30 years old right now with your money?
Listen, first of all, I'm hugely bullish on the millennials, hugely bullish. They rely on peer-to-peer information, which, while it isn't perfect, is certainly better than top-down education. They're curious. The ones that I come in contact with are hard-working. I'm hugely bullish on the millennial generation. Advice, 5 pieces of advice. First, read. Read Economics in One Lesson by Hazlitt so you understand how it is as opposed to how they wish it were. And then, after that, read The Intelligent Investor by Ben Graham. Approach the world with knowledge rather than emotion. After you've done those 2 things, or concurrently, do a few other things. The first of which is save. In order to be a capitalist, you have to have some capital. Take 10% of every piece of income that you see pre-tax and save it. Before your Starbucks, before your date, before your beer, before your rent, take 10% and save it. And save some of it in gold. Save some of it in a medium of exchange that's simultaneously a store of value. But invest in yourself, in particular, if you have one, in your own business. Although I have a great record over 40 years, can never make you as much as you can make yourself. So invest in yourself and invest in reality. There are some wonderful quotes about that. Buffett famously says, the market in the short term is a voting machine. And we all know how stupid that is. In the long term, it's a weighing machine. So invest in things that are heavy, not in things that are popular. The second great quote is from Wayne Gretzky, the hockey player. He says, on the ice skating arena, most guys skate to the puck. And that's a problem because there's all these big, mean guys swinging sticks. Skate to where you think the puck is going to be as opposed to where all those big, mean guys swinging sticks are. So those 2 things, understand value and try to think about where the puck is going. That'll allow you to allocate your savings in a way that'll let you get through life and become quite rich.
Rick, those are sage words, and I totally agree with absolutely everything you say. But I would make a 6th point. And you mentioned 2 excellent books, superb recommendations. But also, when we're talking about speculating, pick up this novel, Speculator.
Agreed. Pick up, in fact, Doug Casey's whole series. It's wonderful reading. It's actually a way to get all of the stuff that I've suggested in a pleasant circumstance.
Doug Casey and Rick Rule, I want to thank you both for your time, for speaking with me. And I could talk to you both for hours, but we're out of time today. You both are what we, in my generation, would call the GOATs, greatest of all time. So thank you very much for coming on the show. Appreciate it.
I'd like, as I often do on Kitco, to give your viewers an incentive to visit with me. Any of the viewers or listeners of this show who would like, I am happy to rank their individual natural resource portfolios and also to comment on companies individually where I believe that my comments might have value. Should the viewers wish, if they go to SprottUSA.com/rankings and enter the names and symbols of their portfolio, I will comment and rank individually each stock, and I will include the Barron's 45-year gold mining index chart and also a 100-year commodity index chart. I look forward to doing this. I've done it over 15,000 times this year, and I look forward to doing it for as many of your viewers and readers who believe it would be useful to them.
Thank you, Rick. Our viewers always appreciate your feedback and insights, so I appreciate that. Thank you again to both of you. Stay tuned for more at Kitco.com. I'm David Lin.